Hey guys, it's Kyle. Welcome back to my channel at Kyle Lowy Strong. I appreciate you guys following me on Instagram, on my stories, on my IG lives, everything for me to kind of help you explain anything that I know about stocks and really just give you tips where I can. If you guys don't know already, I do have a Telegram group. It's $50 to enter. Through that group, I'm giving you my tips. Everything I know about stocks. It's not expensive. I'm not going to be charging you guys like $600 like gurus do. It's really just for you guys to learn the knowledge that I've learned over the past coronavirus quarantine times. So I want to make sure that you guys have the knowledge that's necessary and not have to, wait 10 weeks of going through stuff that you don't really need to know all of that, right? So, of course, hit the subscribe button, turn the alerts on so you know when the next video is going to be coming out, and let me know what more you want me to focus on for the next videos. Today's focus is going to be on options. A lot of you guys have been asking me about options, how to even execute a call, how to execute a put, what the break-even price is, the strike price. We're looking at a lot of terms today, as well as the expiration dates, because we want to make sure we pick the right date on these options, and as long as they're in the right trend, we can catch it fast enough. You can make a quick buck here within a few hours, within a few minutes, or a few days. All depends on the stock and the expiration date. So today I'm going to give you guys a few examples, but I want you guys to really just learn the terms, and then eventually we'll be able to dive in a little bit more. And I am going to be offering one-on-one classes, so this way you guys can get a little bit more one-on-one time with me. And if you want to learn more precise movements on how I'm picking my trades, how I'm looking at the options, why I'm getting in it, when I'm getting in and when I'm getting out. A lot of things I'm going to be offering here soon, and that's all going to be displayed on my Instagram as well as my website. I am making a website here soon. It's not available right now, but it should be done here in the next week or so, okay? So stay tuned. I'm going to be announcing all of this on my Instagram soon, and without further ado, let's hop into options, the terms, how to execute a call on a put, and help you guys feel more comfortable in this space of the stock market. Okay guys, first thing I want to point out is you need to have options on your Robinhood, okay? So you're gonna go to your account, hit settings, you're gonna scroll down and make sure your options level says level 2 and that you have options active and able, okay? You do need to get Robinhood Gold. I think it's like $5 a month, all right? So that's just one thing I wanted to point out. Now, we go back to Robinhood, we're gonna hit Walmart. We're gonna look, this is just for an example, I'm using Walmart. Here's the stock, and once you activate your options, you will see this right below where you would normally invest. You're gonna see trade Walmart options. We're gonna click that, and it's gonna take us to this page right here. Okay, so before I dive into these numbers, I want you guys to see that there's a buy and sell, and there's a call and put, and expiration dates. We have the strike price. We have the price. Okay, this is called in the money. This is called out of the money. Now, in the money, out of the money, all that simply means, you're going to hear that term a lot when you're trading options. The share price, Walmart, is trading at $145.87, right? Anything below this, 145, 144, 143, 142, the stock has already hit this price. So that's called in the money, because you already know that it's most likely going to be around this price, and it's not really a guessing game to see if it's going to hit this number because it already hit it. So that means it's a little bit more expensive to buy these because they're already in the money and they've already hit that number. Now, when you're trading options, it's like you're going to the casino and you're betting on red or black, right? You're betting on a call or a put. It's going to go up or if it's going to go down. So if you're right, typically what you want to do is, if you think that Walmart's going to be going up, you're going to be doing a call. Let's say it's just $147. You think it's going to move from 145 to 147, right? It hasn't hit that price yet. We don't know if it's going to hit that. But if you think it's going to hit that, you can buy it for less, right? This is 57 cents. This is $1.51. If you buy this at 57 cents out of the money, because it hasn't hit that price yet, you get one contract For 57 cents, it's going to cost you $57. You can let it expire for today or until cancel, right? Just like normal. Now, the thing is, one contract equals 100 shares. Okay, so rather than you just getting 100 shares of Walmart for $147 per share and paying almost $14,700, you're only paying $57 for 100 shares of $147, right? If you're staying with me so far. If you are correct, and let's say, because this is expiring February 12th, and it's February 9th, so you have until Friday. Let's say tomorrow, Wednesday, this stock goes and hits 149. What will then happen is your 147 is now in the money because the share price is over your strike price. What that means is, since you're in the money, your cost will be somewhere around 151 or 220. So your $57 just turned into $151 or $221. Hopefully this all makes sense for you guys. That is what happens when you buy a call and you are right. They do move very fast, so you need to know how to buy and sell. So as soon as this hits your price, make sure you sell and you take your profit. I like to say that 30% is the perfect percentage to get out. As soon as you have that, go ahead and sell. If you were to buy this and you buy 10 contracts, it's $570 that you're paying. But if you are correct and it moves up, becomes in the money, now you are up to almost $1,150. So you're up almost $500, right? So that's just how options work. This is called the premium price over here, premium price, and the strike price. That's really all you need to really focus on when you're doing options. And Robinhood lays this out very nice, very smooth, and it's easy to read. You can definitely pick a longer expiration date, but I would really try to stay with either in this week or next week. You don't want to go too far out, otherwise it just is just a crazy amount. You're paying almost $1,400 for the same thing. It just really depends on how the stock's moving and what you're reading, okay? That kind of goes over what a option is. I went over it very fast, but it's a strike price, right? Here's 145. You're guessing on it going up or down with a put. Anything over 145 is technically seen as in the money. And then anything under 145 is seen as out of the money because you're betting on it going down, okay? The premium price is what moves very fast. It's a little bit easier to be doing calls because you're betting on the stock to go up. What you guys want to do is focus on former runners, so big percentage gainers. All right, so Walmart, for instance, isn't up too much. It's up 0.58%. Some good tips is to look at hot sectors or earnings winners. You want to identify a realistic price target. You want to choose your strike price based on the chart history of the stock, okay? I do, like I said, like to choose out of the money calls or puts, especially when you're expecting the stock to move very fast. And that's how you really maximize your risk and reward. It allows you to make a quicker buck, okay? All right, we are done. I appreciate you guys hanging in there. I know that there was a lot that I went over in this video, but I want you guys to know, obviously you can go, rewind, pause, take notes. I want you guys to learn. I want you guys to know everything that I'm putting out there. this video was a little bit longer because there's a lot more to go over and it can be confusing. But I just want you guys to know that everything that I've said should be able to help you feel more comfortable in the stock market, okay? So I hope that I gave you enough education and knowledge today so that you guys can go out there tomorrow or even today, depending on when you're watching the video, and get in your own option, get into a call, get into a put, get into something, and if it moves the wrong way, understand your entry and your exit point, or how much money you're willing to lose per trade, right? If it's a percentage, if it's a certain amount of money, it's gonna be different for everybody. So it's up to you on when to buy and when to sell. The entry and exit point is gonna be different for everybody. Okay, so don't worry about that. You'll get the hang of that with the more practice, okay? But all in all, thank you guys for watching. Of course, hit the subscribe button, like, turn the alerts on so you know when the next video is gonna be coming out, and let me know what more you want me to focus on for the next videos. All right, have a good day. I'll talk to you guys soon.